Hello everyone, my name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is October 26th, 2021, and I'm coming to you again for the Tuesday live stream. I hope you're well. I hope you've had a great day. I hope everything's well with you and that we can have a substantive conversation. There's something really important that I want to share with you today. As you can see by the title of the video, I am indeed selling everything, and I want to go into detail about that. I know that this topic will trigger some people. I know that many will disagree with me, and that makes sense to me. I understand that. But hear me out. I'm not trying to change your opinion on anything. I'm just trying to share things with you. And if you learn something from this, and if you act on the information that's shared, then good for you. I know what I'm going to do, and that's all I can say. And you should do your own research. You should make your own decisions, okay? So with that being said, let's get started. Let me just double check that the stream is live. Let's see. Okay, we are indeed live. Okay. So, you know what? I usually don't zoom in, or zoom out rather. Okay, we are indeed live. Whoops. Okay. So, you know what? I usually Sorry. So yeah, I usually don't zoom out. I usually don't take the big picture, and the reason being is that I'm a trader. Some of you may know, those of you who are subscribed may know that I trade profitably, and that's what I do for income. That's not my only source of income. That's one of them. So and one of my sort of the theory or the thesis that I employ in my trading is that I'm looking at small moves. I'm trying to expose myself as little as possible, right? So I'm trading, you can call it scalping. It's somewhere in between scalping and swinging, but I'm trading maybe for a few hours, sometimes just an hour, and I'm trading these small waves, usually on I'll use the 15-minute, anywhere between the 15-second and the 15-minute time frame. 15 seconds sometimes to make entries, and 15 minutes just to zoom out and see what the larger sort of patterns are at play. I specialize in B waves, and I specialize in Elliott wave analysis, right? And one of my favorite things to do is reversals, and I use B waves as reversals. And I trade on very high leverage with little capital. I can trade on very high leverage. I'm not even going to say what, but to do that requires the utmost precision, because, you know, my stops are usually within dollars of price action being sort of stopping me out. So it requires a lot of precision, a lot of care. That being said, zooming out is cake to me. Looking on larger time frames is no problem. I'm not saying I'm the best trader in the world, but I'm not shabby, okay? And I haven't been looking at the larger time frames because, to be honest, it doesn't really serve me. I don't really care. Or I didn't. Let me say this. I didn't really care what Bitcoin did 2 weeks from now because I'm looking at move for move. I give this daily show, and so I'm just calling out, what it's doing in the next few hours, and then 24 hours later, I'll give an update, right? And for my spot holdings, for instance, VRA, Veracity, I don't really care what it does, to be honest, because I have it staked for 25.25% APY, and all I do with it is, restake it once I reach a threshold that I can stake whatever I've earned. And I have a whole lot of that. So for me, I was just accruing that asset and generating passive income. And the chart was really good, but I didn't even look at it, to be honest, because I don't care. I'm not looking to sell, or I wasn't looking to sell until we reached a macro top. And for better or worse, I wasn't really following. I was focused on my trading, and before I used to trade Litecoin. Now I'm trading Bitcoin. Now that Phemex, my favorite exchange, has Bitcoin using USD as collateral as the margin. So that's been my focus. I haven't been focused on my spot trades. I made my entries. They are what they are. They were pretty good, and I just let it do what it did. It's great. It's one of the best things. Very low pressure, low worry. Once in a while I check my account. Ooh, 2x, 3x, 4x, 5x, 6x. Great. But now, given what I've seen in Bitcoin, I'm selling that too. And I'm going to tell you why. All right. Let's go on the weekly chart. And for those of you who follow this channel, you know that I almost never do this. Is it a good thing, bad thing? It just is what it is. I just never do it. Like I said, I'm not really concerned with what Bitcoin does in the larger time frame. Okay. Log chart. I hope the music's not too loud. Hey Google, turn it down. All right. Bitstamp chart. Huge 5-wave impulse. Okay. We have all of this just been going up and up and up. These are the various bull markets and bear markets. Now, our focus is actually on this recent one. Actually, no, let's put that back. Okay, that is our recent sort of bull market, which started in February of 19, gave us a second wave, March crash of 20 with COVID, up for the third wave. Actually, this is an old, this is an old count. This is an old count. No, this is accurate. This is accurate. So the issue what I'm saying is this. A lot of people, a lot of technical analysts are saying that this is a wave 4. This is a wave 4. And we're getting ready to hit a wave 5, a fifth wave in Elliott wave theory, which is an impulse to the upside, okay? Here's why I'm saying we have all 5 waves in, okay? So we have our second wave, which was complex, and our fourth wave, which was simple. You all know, if you follow this channel, if you're subscribed, that there is in Elliott wave theory something we call a law of alternation, meaning if you have a complex second wave, which you see the March crash of the pandemic or COVID crash, this was a complex second wave, okay? You then have a simple wave 4. Let's look at our wave 2, okay? And let's look at that retracement vis-a-vis the wave 1 impulse. Taking the fibs on that, we see that, let's see. Actually, let's pull it the other way around. Let's see. No, I liked it the first way. There we go. So you can see that it retraced pretty much to the 382, okay? Typically, the second wave is supposed to come anywhere between the 0.5 and the 618. Let's see. No. I'm right. I was right the second time. Let's pull it this way. I use the Elliott Wave retracement tool both for extensions and retracements. This is why sometimes I use them both ways. Okay, yeah, this is how I use it. Let's turn off the magnet. Right there. Okay. So the minimum retracement of the second wave is the 382. That's the minimum, okay? But it typically comes between the 0.5 and the 618. And this is what you saw here, right there. So we hit the 0.5 and we were getting ready to go. We had the March crash, which took us all the way to the 886, which is anomalous. That was not normal, okay? And that is why that is a special event, okay? This is where we were supposed to stop, at the 0.5, and this is where we had consolidated and we're actually making our way up. So you see, it is in line with the principles of Elliott wave theory and Fibonacci, where it says the minimum retracement for the second wave, for wave 2, is 382. The maximum retracement is the 618 of wave 1. This is exactly what we got. We actually got consolidation onto 0.5, wick down into the golden pocket, but then March crash took us all the way down to the 886. Okay, so that was wave 2. It is valid. We are not invalidating it because of the Black Swan event of March 2020. Then you have your third wave. You all know that a third wave, and an extended third wave, as this one is, happens and gives you 5 waves. So there's always actually 5 waves in every impulse, but it's not always clear to count. But in an extension, you can count them very clearly. 1, 2, 3, 4, 5. Once again, you have complexity in the second wave retracement, and then simplicity in the, or complexity in the second wave, simplicity in the fourth. Boom. See, you got that right there. And the fourth wave retracement is supposed to come between the 681 and the 786, right, of the top of the third wave. So if this is the top of the third wave, we zoom in here. I pulled that opposite. So this is the bottom of the fourth, top of the third, boom. Okay, we can see that from the top of the third, we get a wick down to the 618, which is the maximum retracement. It barely hit the 618, as you can see here. That is the maximum retracement of the fourth wave, but it's a valid fourth wave, okay? I'm just pulling these just to show you the validity of this wave count, because this is the basis for what comes here. So please stay with me. If this isn't a proper wave, like, I can't tell you what this is without first validating this wave count right here. This is why I'm going over this. Because if this wave count is off, then so is anything that I say here. And this, I know, is why you're tuning in. You want to hear why I'm selling everything. You want to hear why I believe that this is a correction, an ABC correction, and we're in the B wave. And we have yet to print the C wave down, which is the longest and Typically the most, well, no, B wave can sometimes be more impulsive. But anyway, it's the last leg of the retracement or the correction. Okay, so valid fourth wave. Fifth wave. Why is this a clear and distinct fifth wave? I've spoken of this before on the channel. There is something in Elliott wave theory called an ending diagonal. Okay? And actually, we can look in my favorite book for Elliott wave theory, Elliott Waves Made Simple. And you can see here the explanation of an ending diagonal. I want to share this with you because the purpose of this channel is educational first and foremost. The more you know, the more you make. I promise you, the more you know, the more you make. So let's look. Ending diagonal. What's going on with ending diagonals? There are basically 5 waves, but each wave is constituted of 3, 3, 3, and 3, okay? And this is what they look like, right? Here's the pattern. 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3. Okay, that's an ending diagonal, okay? And so you see the ending diagonal in the fifth wave or the C wave. That's very important. Remember that. Okay, back to our charts. What do you see here? Let's move in on the daily time frame so you can see with a little more detail why this is an ending diagonal very clearly, right? So you get up, you have 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3. I'm not making it up, am I? That's clearly an ending diagonal, right? Here you can draw your support and resistance on this, and you can see exactly what I'm talking about. It's clearly an ending diagonal, and it's in the fifth wave, and we know that ending diagonals happen in fifth waves, wave 5s, and C waves. Okay, so if that is it, if that is the fifth wave, indeed, let's go back on the weekly time frame. Then we all know that what ensues after 5 waves up, you get an ABC correction. Everybody knows that. I literally say it on this channel every single day. After 5 waves up, you get ABC. After 5 waves down, you get ABC. Okay? Every correction happens in an ABC pattern, right? This is an incontrovertible rule. It's not even a principle, it's a rule because I've never ever seen it violated. And I have tens, maybe a little more than 10,000 hours of chart screen time, okay? This is literally all I do. It's like ruining my eyes. It's okay, I'll buy new eyes at the end of this bull run. So, if you get an ABC correction, what's this? This is an ABC. A is in 3 waves, right? B is in 3 waves. Let's chart this out, and we'll get a little more specific. Okay, A, B. Remember what I said? I specialize in what? B waves. That's one of the ways I make a living. I specialize in B waves on short time frames, but you know, it also applies to large time frames, and I trade at very high leverage. So I look at these B waves day in and day out, and I can tell you that is a B wave if I've ever seen one. Okay? So, hey everybody, Joel, Rich, welcome. So this is, for me, clearly a B wave, okay? And we can go and get more specific. I'm going to remove this so we can see in detail, and we can count this out really quickly. Like, this is an A wave, and you all know that A waves are made up of ABCs as well, right? So you have A, B, C. The C wave is 5 waves a 5-wave impulse, okay? And in this case, that's down. Then you have your B wave, okay? Your B wave's also made up of 3 waves. A, B, C. What do you see here? What do you see here? Do you see this? This is another ending diagonal. We see ending diagonals happen where? In wave 5 or wave C. Do you see the anatomy of this? And you can get really specific. You can go in short time frames and count out the 3 wave patterns. ABC, 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 or is it 1, 2, 3? It's 1, 2, 3, sorry. 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3. This is why it's very important to kind of learn this theory and apply it, right? So we have A, B, that is one aspect of B. That's A of B. So 1, 2, 3. That's an ending diagonal for the A wave of B. You come back down, that's the B wave of B. Now, the C wave of B is made up of what? 5 waves up. 1, 2, 3, 4, 5. Why is this wave broken? We're on the daily chart. Let's go on the 4-hourly. Also high time frame. What happened here? Okay? Even if, let's say you don't trust my count of this wave. Okay? Why do you know that the correction has started on this wave and this wave is complete? Here's one way to look at it. Let's pull out our cool regression trend. This is a really cool tool. I don't know how many people know about this, but it is nifty. It does a channel for you and you don't even have to do any work. Okay, let's pull this here. Yeah, okay. We broke trend. We broke the channel. Barely, but we pretty much broke trend. Even without the channel, you can tell because you have your 21 EMA having lost that up here. And you all know that once you lose the 21 EMA, that signifies the discontinuation of an uptrend, and that's exactly what you're getting here. Do you see that? Even if you don't trust my count, and I mean, I think this is simple enough. Well, it's not simple enough to count. To be honest, I had a lot of trouble counting this, as you all know, because I thought 60K was the top, right? Or 61 or 62K, and I was shorting and I got stopped out, and I was annoyed about that. But I had trouble counting this, and so I put it in a channel. But you know, that's a lesson learned. I learned the lesson, and from here on out, I used channels to confirm my Elliott wave counts on larger time frames and the 21 EMA. I mean, it's easy to see. You lost it, you're trying to recover it in the B wave, and now you're starting the C wave. You're losing it again. That's how you also know the C wave is starting, because you're losing that 21 EMA, even your 55 EMA, which is the blue EMA here. So I hope you guys can see that. This is why, let's zoom out again on the daily. This is why I'm saying that this is A, this is B, and this is the top of B. This is why I'm selling everything. What's the whole purpose of this crypto shit? Why do we do it? We do it, one, because, you know, some of us really believe in the technology, we believe in the movement, we believe in the ideas, we believe in the potential it has to change the world in so many ways, okay? And in addition to that, many of us are here because it is an opportunity for financial freedom, okay? But the only way we can gain financial freedom in investing in crypto is to be a bit savvy. It's to be a little clever. We buy low and we sell high, right? We're literally all trying to sell tops. Not everybody's going to do it. As you all know, this is a zero-sum game and it breaks my heart. But what's good about this is everybody can get something. Why? Because every single time you hold an asset that goes up and down and up and down and up and down, somebody can make money and you don't lose money. So if I'm holding VRA, one of my biggest bag, okay, easily my biggest bag, I have more than 500,000 VRA, much more than 500,000. And if I let VRA go down, for instance, it was at 6 cents, it goes down to 5 cents and goes back to 6.5, and then goes down to 4 cents, and then goes to 7 cents. In that movement of it going up and down, I did not lose money because I never realized any profit, nor did I realize any losses. But in that fluctuation, someone else could have taken advantage of the volatility, right? The up and down action, and gotten money, gotten sort of realized profit off of the moves. So in that case, although I quote unquote lost, I didn't realize my loss, nor did I realize any gains. Somebody else also made out well. However, for any transaction to take place, there has to be a buyer and a seller. So even though I didn't lose any money, somebody did. Somebody sold to that person who bought. Somebody bought from that person who sold. Okay, anyway, it's a zero-sum game. Not everybody can sell the top, but those who know more will get closer to selling the top. This, my friends, is a top, just like this was a top. And just like when this happened, everybody's saying that's impossible, it's not a top. This is also a top. This does not, I repeat, does not signify the end of the bull run. This does not signify the top that Bitcoin will do in this bull run. For me, this correction hasn't ended. We've been in what you would call a B wave for three months. It's been 3 months. You know what else I know about us in crypto? We're super impatient. We're so impatient. And who's blaming us? We make ridiculous gains. In those 3 months, I've made so much. I've made more money than I've ever made in my life just holding on to assets. Of course I'm impatient because I see the gains. I see the potential in this market. I made in 7 days of leverage trading, Litecoin, I turned a 50x profit using high leverage. 50x, like where do you see that? Of course we're impatient. We've been conditioned to be impatient. So if I tell you that we've spent 90 days going into this B wave, but we still have a C wave, and it may take another 90 days. So by Q2, we'll start going back up again. Many people will say, I give up. I don't have time for this. The bull run is not over. It's lengthening. And this is clear proof. I don't do so much on-chain analysis. I don't look at stock to flow as much. My expertise is in charts. So I'm telling you that this B wave, actually the B wave sometimes takes the longest. Like, see, this A wave took only 40 days, okay? So if the B wave, and I've seen this before, this B wave takes 90 days, maybe the C wave takes 40 days as well, or 50 days. I can't see it taking 90 days, okay? And then we can look at this. We can look at a fractal of this. The beauty of all of this is that it's fractalized. So let's dive in and see this very same pattern on a smaller time frame. Almost exactly. Remember what we saw, okay? So we're on the 15-minute time frame. What do you see here? Okay, we're on the 15-minute time frame, meaning from here, this is everything that happened from the 20th. I want to focus on anything that happened from the 20th of October until today. What's this? This is an A wave. What's this? Do you remember this? This is your B wave. This is your top of the B wave. This is where we are in the macro sense. What's this? What's this? This is your C wave that's starting. Does everybody see that? It's like, look at it. This is the beauty of mathematics. This is the beauty of what we're doing. This is the beauty of charting. It does not lie. Look, do you see what just happened here? This has yet to happen on a larger time frame. Again, remember this. Look at this pattern right here. This and then that. This is the third wave. I may have just taken profit. Almost. Did I take profit? I may have taken profit. Let's see. No, I'm still in. I haven't taken profit yet. I'm supposed to take profit here. I don't want to give money back to the second wave that's going to form after this. So I'm going to take profit soon on that trade. Again, I do high leverage, low capital trades. One of the reasons I do that is because I'm still honing my skills. But I'm getting really, 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 really good to be able to go to bed and not look at a trade that's on very high leverage. Wake up and see that I was $2-3 literally this morning, $2-3 away from getting stopped out. This is the level of precision that that's required for high leveraged trades. And that's just what I prefer. One, I don't have that much capital to trade with. Most of my capital's tied into spot. And two, I want to hone my craft and really get good and not lose my shirt. So this is what I do. And if I could do high leverage trade, I mean, spot trading, I can do in my sleep. Yeah, because I could set my stops wherever I want, or not set. I don't have to set stops, right? Anyway, do you see that right there? Now let's zoom back out on the weekly. You can't make this stuff up. I mean, it's right there. Even if you don't know charts, if you saw the pattern that I just showed you, and then you see this pattern here. Let's actually go on the daily because it's easier to. And look at this pattern right here. What do you see? It's the same thing, except we looked into the future. Do you see that? You're going to get a kind of channel down, and then you're going to get the third wave slinking down here. Let's go back for people who may have missed it. Like, it's not a magic trick. This is just mathematics. This is not, I didn't, do any tricks. I'm on the 15-minute chart. I went from the 15-minute to the daily chart back to the 15-minute chart. Here's your A wave. Here's your B wave. The B wave also constituted is also constituted of three waves. An A, a B, and a C. And the C is in 5 waves. Okay? And after comes that, after that is the top. Basically, we happen to form a B wave that was higher than the previous sort of high here. Okay? So that's basically what gave us our all-time high. But you see this C wave down. This is the third leg of the C wave. This is what you're seeing now. This is what you can expect. This is what you can expect. Let's see. I'm thinking. If this is the A wave. Yep. This is the B wave. This is the C wave. Okay. Yep. That's exactly it. All right. And then it's just down from here. Yeah. Okay. Another thing I want to show everybody, and I'm going to go into the chat in a second, but I hope you're getting value from this. I hope that. Oh yeah, sorry about that. Yeah, it does lag a little bit. Usually lags about 20 seconds. I apologize for that. But that's why I'm so bullish on Stratus. That's, and other projects that are going to revolutionize streaming. It's just, there's a huge problem with that. In any case, I am going to show you one more thing to substantiate my thesis on why I believe that we're at the top. And I'm going to go back in the weekly chart. And I'm going to show you something. And a lot of people like to point to this as as one of the reasons it's altcoin season, okay? And I think it's a bit irresponsible for many influencers to be talking so much about altcoins when it's clear, well, I don't know if maybe it's not clear to them, but it's likely that Bitcoin is falling, even in the bullish case, in the bullish scenario, before I even like zoomed out and saw, oh crap, we're at a macro top. I was under the impression that we were going to go to 52 to 53K and then resume, okay? That is still valid. However, that's just one wave of the 5 waves down in the C wave, okay? Here we're looking at market cap. Bitcoin dominance. Yeah, that's right. Bitcoin dominance. A lot of people are saying, hey, Bitcoin dominance is going to plummet. It's going to be revolutionary. It's going to be an alt season that you've never seen before. However, there are 2 instances in which Bitcoin dominance rises. 1, when it's mooning. 2, when it's dumping. Okay? And there's also 1 instance when Bitcoin dominance is falling, or 2 instances when it's falling. When Bitcoin is ranging, and after Bitcoin, only when Bitcoin's ranging does Bitcoin dominance fall. And then capital is kind of extracted out of Bitcoin into altcoins. What do you see here? Obviously, dominance isn't an asset, but you can see patterns all the same. 1, 2, 3 waves down. A, B. What do you think is going to happen? Even if you didn't think that Bitcoin was going to dump, people who are saying that dominance is just going to go down, what about the B wave? There is no B wave here. The minimum retracement for the B wave is what in a zigzag? 0.5 to 0.618. 0.5 of this A wave would be around here. If it had gone up to here, I would say, oh, maybe, a C wave can start. C wave cannot start. What's going to happen is we're going to get a B wave probably up until here. This 55 EMA, this green line, okay? That Bitcoin dominance shooting up is going to be a result of Bitcoin dumping. Okay, so I hope that is clear. This is what I'm seeing, and I don't want anybody to copy me. If you think what I'm saying makes sense, by all means, go ahead and use the information, and I hope you make a ton of money. But do what you're comfortable with. I'm comfortably going to sell everything and buy back later on. And I hope to make 8 figures in this bull run. And again, I do not believe that the bull run is over. I think this is just this is kind of an intermission, right? This is this ABC playing out. And again, what's the target? What's my target? And I know this sounds crazy. I know it's wildly unpopular. I know a lot of people want to throw egg in my face. I know that people are emotionally invested, and that's okay. I understand. I don't mind. I still feel the need to share this with you all, not to keep it to myself, because what good would that do? That's the whole purpose of this channel. Sharing my insights and trying to educate myself and everyone else by sharing my path in kind of mastering charts and mastering technical analysis and mastering the art of trading, the art and science of trading. What's the target? Okay, I'm saying that Bitcoin's going to nuke down because we're going to get a C wave. What's the target? Okay, very simple. We all know that the target of the C wave is the inverse 1 to 1236 of the A wave. If this is the A wave down, okay, we take our fibs, we turn our magnet on, the bottom of this down 1236, which is the more likely target, right? Because it can come anywhere between 1 and 1236, okay? The minimum retracement for this C wave is 28.6 on the Bitstamp chart. The maximum retracement is 23.561. This is what I'm seeing. This is when I'm buying back my assets. This is when I'm buying back my VRA. This is when I'm buying Stratus. This is when I'm buying what else? IMX, Immutable X, right? This is when I'm getting back in the market. In the meantime, I'm tethering up. I'm going to stake on Celsius and earn yield on my USDC and my USDT. This is my plan. Again, don't just follow me blindly. I hope that this analysis has been useful, and if you find any value in it, like the stream, and hopefully you make a good decision. If this is correct, you multiply your crypto gains exponentially, right? Let's look at VRA. 1 second. Let me just also bring to your attention. Look at this weekly Stochastic Rsi. Look at what we just printed. All right, that was a top right there. Okay, we came all the way down, and printed this top, okay? What do you get here? Another top with bearish divergence, meaning this top is slightly lower than this top, although this top here is higher than, actually, there's, hold up. What am I saying? Yeah, there's slight bearish divergence. Yeah, slight bearish divergence. This top right here on price action is lower than this top, and then on Stochastic Rsi, this top is higher than this top, so you could put an arrow there, boom, the arrow would be up. That's bearish divergence on the weekly time frame, okay? And you're about to get a bearish cross on the weekly time frame, okay? And you're pretty much oversold. You're at 93.62 right now on the Stochastic Rsi on weekly, and we all know that, it doesn't necessarily mean that you have to go down, because in a bull market you can stay oversold. We know that. However, do you typically get a bearish cross on the weekly time frame in a bull market? That's the question to ask, right? Usually maybe get something like this, right? But not a bearish cross. So, and then lastly, look at these dojis or these falling stars that you're printing on the weekly time frame, not on the daily, not on the 4 hourly, on the weekly. Okay, now let's look at my favorite asset, VRA. A lot of you came to this channel because you're fans of this as well. It's done super well, and it even hit a new all-time high today. Again, I haven't been paying attention because I don't really look at it. I just appreciate it from afar, and I'm staking it, as many of you are, and appreciating the fact that it's doing so well, and I'm compounding my gains by staking it, okay? So, if you look here, you see VRA has also done something similar to Bitcoin. 5 waves up with an extended third wave, 1, 2, 3, 4, 5, and soon after that, we got an A wave that happened when? In April, okay? Same time, more or less, as our May crash, except this one extended a little longer. And ever since July 19, we've been in an uptrend. Now, if you know anything about Elliott wave theory, you know anything about price action, you know that we can't just keep going up, because that's not how corrections work. Corrections happen in an A, B, C pattern. If this is an A, then this is a B, very, very clearly. What's the maximum retracement of this B wave? Very simple. You take your inverse, not the inverse. You take the 1618 extension of the A wave, and you see that if VRA were to print an expanded flat correction, okay, or a an irregular flat correction, as they call it, we could go as high as 19.6 cents in this B wave. We're on the log scale, right? Because you have to look at these large time frame assets in crypto logarithmically. Now, if it stops before the 1.236, it's a regular flat. Most assets, including Bitcoin, the kingmaker, the lead asset in our space, have been printing regular flat corrections. So I expect Bitcoin or VRA to do the same. I expect the top to be 9 cents. Okay, and we're pretty much there. We haven't yet crossed bearish on this stochastic RSI, so there may be a slight bit more to go. But this Fibonacci is clearly at 9 cents. So if it went into this, breached this 1236, then that's still fine. It still can be a B wave.